Let's bring in today's panel. We got Jonathan Hoenig from Capitalistpig hedge fund. He is also a Fox News contributor, and John Petrides from the Point View Wealth Management. Good to see you both. Jonathan Hoenig, first to you. You know, we hate charts usually around here in Fox Business, but I got to show you one because the point that Jerry Willis was making is that the market was up 300 points until, and that's not the chart I'm looking for, gang. Show the 10-year with the Dow. What happened specifically was when we saw a spike in the 10-year, we saw the Dow go down. Show the chart, please, so that our audience can see that. Jonathan Hoenig, isn't that the point, that the moment that the investors saw the spike in the yield, that's when the Dow began to tank?
Yes, David. In fact, bonds are shuddering. That is, interest rates, as you said, are spiking. We haven't seen something like this in years. In fact, people are waiting for the Fed to raise rates. Interest rates are moving up even faster than the Federal Reserve is, and the market seems to be saying that inflation is real. When does this matter for stocks, David? I think people have been saying that. I think you're starting to see an indication it matters now. As soon as those rates started to spike, the Dow took, what, a 500-point, 400-point
Well, we're seeing it right there. Keep that chart up on the screen if you can, because the yellow, of course, is the Dow. The blue is the yield on the 10-year. And John Petrides, the point is that the market was up initially on those Fed notes because the Fed said, we're not going to be very aggressive about pushing up rates. But I'm wondering, when you see the rates go up without the Fed doing anything, can the Fed avoid rates going up?
Well, I think the good and the bad of the report is the bad is the Fed is going to see gradual increases of rate hikes. The Fed started out saying there were going to be 3 hikes in 2018. The market is clearly pricing in a 4th hike. The good is the U.S. economy is far from a recession. So, yes, there's volatility that has now entered into the market because of this, but we are in a very healthy and strong situation here. Yeah. So I think sell-offs like this should be met with buying opportunities.
Well, you bring up a good question. Jonathan Hoenig, I'll put it to you. If there are 4 hikes in the interest rates by the Fed this year, will the markets tank, or will the economy be strong enough to absorb that?
I think you're putting a lot of too much credence in central planners, David. I mean, think about on the way down with all these interest rates, how the Fed kept changing its benchmark, changing its plan. So I think to your point, while they even are scheduling 3 or 4 interest rate hikes, we're now entering a period what used to be called that the Fed being behind the curve, that interest rates are moving even ahead of the Fed. And David, you know, it wasn't too long ago that the 30-year was at 6%, 7%. If this inflation risk is for real, we have a long way to go.
Jonathan, I think you hit it. Jonathan and John, good to see you both. Thank you very much.